Eric Muathe, Muathe.com with world market analysis for the weekend of December 17th and December 18th, 2016. Let's take a look at markets here. We see that Asian markets, let's call them, for the most part, they were up on Friday. And take a look at European markets at the close of Friday's session. And again, we also see a little bit of a positive close on Friday. Take a look at the Americas with about 1 hour to go before the close of Friday's session. And we are looking at markets that are for the most part positive. And we can see here that US markets with 1 hour to go slightly to the downside. Let's take a look at those charts. Let's begin by taking a look at the Australian market, which was trying to break out this past week above the recent weekly closing high, and that level was at 566,644 actually 0.00, which happens to be this weekly closing high. So that breakout as of right now is failing, which is not a good sign of what the market could be intending to do, unless it can clear that level above 5,644. We might be looking here at a market that is now set up for a pullback. Also keep in mind there's topside resistance on the weekly RSI. Just draw it like that. You can see we've come here over the last week and we seem to be stalling on this resistance level. And there's also another line coming from the recent break. So this break brought the market off the highs there, and we would subsequently drift lower. So we draw a line from there, and again we can see that the market has hit that red line and is pulling back. So the red line and the blue line seem to be offering sentiment or RSI resistance, suggesting that now without a breakout, chances are we are looking at the Australian market pointing down. Not day to day, but week to week. We take a look at China and we can see that over the last couple of weeks, it's pretty much been down and coming back to test this breakout. And that breakout that was successful after it cleared that resistance is potentially what is being tested. And the level to watch there is if it can stay above 3,108, which is this weekly closing high. So after a nice breakout, the market has stayed above that. If it can still hold above this level, then you can assume that this is just a normal pullback coming back to test the breakout level. And at the same time, if we break below 3108, any break below that would suggest that this market could actually be setting up for a deeper correction. If you take a look at the weekly RSI, this is where it could find support, connecting RSI lows going back to the lows of early this year. So this line connects all these lows and now coming back to test that line. So a bounce on that line would be constructive and bullish for the market short term, and at the same time a break of that line would suggest that now we are still looking at a market that wants to pull back. The key in my opinion is whether it can hold above 3108. Anything above that and the market continues to be okay. Otherwise, a break below 3108 would suggest that momentum continues to be to the downside. Now, let's not forget, over the last couple of weeks, we've been talking about where the RSI is stalling. So if you take a look at where the RSI is stalling here and go backwards, you'll find that this has been a trouble spot on the RSI. And so we can see it makes sense that right now, after hitting resistance here, it's been pulling back. This is a 2-year weekly. Let's pan out and take a look at a multi-year weekly chart. And here what I have is a 8-year weekly chart. Draw a line at where the RSI is stalling right now. And you can see that this has been where it's been stalling over the years, with resistance, uniform activity rejection here for the highs there, uniform activity rejection for the highs there, uniform activity rejection for the highs there. And we had a good period when the RSI was trading above this level here. So we had this explosion in price action, and now we are coming back here in late 2016 and we've hit that level and we are already pulling back. So if the past is any guidance, we can see that this weekly chart is suggesting there is a good chance it breaks below that 3108 level and drifts lower because of this sell signal on the weekly RSI right there. Something else we can see on the monthly chart. This is 8 years monthly. So 8-year monthly chart. And what we see here is that this was the break coming into 2016. This RSI break brought the market down, and we've never been back to those levels since. We draw a line from this break point, and again we see that the market hit this level at the beginning of this month and stalled. So the monthly chart also shows sign of at least coming off the recent recovery, and maybe this is where it stops going higher until it can clear this RSI resistance line. Let's take a look at the Japanese market, and here we can see that as long as the daily RSI is holding above 69.1, so as long as the RSI here remains above 69.1, we should not expect any strong pullback. Also on the weekly for the Nikkei, let's watch this level here. If the RSI on the weekly can move above 69.1, that would be added momentum to the upside. Now we gotta watch for this, because if it fails to hold, or if it fails to move above 69.1, let's say this is rejection as we begin the new week, chances are that is where it stalls. So let's just assume that it stalls around here and the RSI stalls here, which means it is going to be rejected at 69.1. If it happens, we can see that that makes sense, because we got two lines. Line number one was the previous break line. So we take this line here, extend it out. We can see that this was the RSI breakpoint during this period here, off the highs there. The market hasn't been back to that level. We came here, we tried to move above the blue line. We were rejected on a weekly chart, which is this level here, and of course we drifted lower. Now we are coming back again to back test that same line. Failure to hold above the blue line could be a problem for the Japanese market. If that is confirmed as resistance, then we are looking at a market that could easily start pulling back week to week. There is also another way of looking at this, which is the previous RSI breakpoint. That breakpoint is somewhere there at the end of June 2015, which was coinciding with the highs there. And we can draw a line from that break level. Should be somewhere around there. So again, if the RSI is rejected at 69.1 and it moves back below the red line with uniform action, this could also be another sell signal area on the weekly chart, confirming that it could be stalling on the level where it has had a problem going back 2015. Again, this line here was a break off the highs there. We haven't been back to those levels, and we draw a line from there, which is every time we get uniform activity rejection below this line, we might call that a sell signal. But the key short term is whether the RSI can hold above 69.1 or not. Above 69.1, this market continues higher. Rejection at 69.1 brings up the scenario of resistance, especially given the fact that we drew this break line that is now coming into play as either backtest failure, or finally it could suggest that if we can move above that blue line, that finally the market has cleared this blue line as a resistance point. So above 69.1 is good. Below 69.1 on the weekly would be a sign of a market that is due for a pullback. We take a look at the Nifty, and we can see here the Indian market right now continues to show that bearish crossover between the 13-week moving average and the 34-week moving average. The last time we had this type of crossover was here, and that was bearish also. As you can see, eventually we would go lower over a period of months. So this is not a good sign for now, but that is not the end all. Keep in mind, we know that we can still find support around current levels based on RSI. So this RSI movement was very good in bringing the market off the lows of early this year, off the lows there. So we've been drawing a line from there. The market has already positively shown support, as you can see. Good support on that line with the double bottom support. So the weekly chart is okay. It just needs to hold this above this green line on the weekly RSI. Having said that, we have to watch the recent weekly closing low. So this weekly closing low right there, if the market breaks below that, expect a little bit of a problem here. So we need to watch that level. The market, in other words, needs to defend that level at 8,074.10. Anything below this number would be a fresh break and a bearish sign. If the market can hold above this number, then the market is generally stable to sideways at worst. If we take a look at the daily for the Nifty, one thing we do see here is this is becoming a problem area on the chart because we are seeing resistance at the 50 RSI level. So you can see here resistance at RSI 50 for the highs there. This has become a new trend, and this is a sign of a market that is not strong at all. Resistance at RSI 50 for the highs there, and here we can see twice over the last week we've been rejected when we try to move above RSI 50 for the highs there and there. So until the market can clear this line, this is a problem, suggesting that net based on this chart, direction tends to favor downside action until the market can move back above the 50 RSI level. So if the market can gather strength, climb above 50, then we can change this downside projection. We are also looking at the area where the RSI broke down recently. So this RSI trend was broken, and since then market's been lower. So we break below the red line there, which is this movement somewhere right there. And so we draw a line from there. Every time we show resistance on this line, the market stalls, and we can see evidence of that. Resistance there with uniform activity for the high right there, rejection with uniform activity for the high right there, and now rejection here this past week for the high right there. So until we can clear the 50 RSI level and until we can move above this red line, chances are we are looking at a market that net looks like it is still pointing down. If we take a look at the Bank Nifty, we gotta be careful here, because if it cracks below the recent weekly closing low, that is gonna be a major problem short term. You can see that if it cracks below the recent weekly closing low after staying more than 2 weeks above that low, which means that now any break below 18,247.65 would be a short-term sell signal. And this is the recent weekly closing low over the last couple of months. A break below that is bearish. If the market can hold above this level, then that's good. Something else we can notice here is this RSI rejection at RSI 50. That becomes a problem, in my opinion, if the market cannot hold back above RSI 50 on the weekly for the Bank Nifty. So failure to hold above RSI 50, and more so if the market goes on to crack below that 18,247 level. So if it cracks below this level, that's going to be our immediate tell that the direction continues to be more to the downside. Now on the Bank Nifty daily chart, we can see evidence of what I'm talking about here. You get uniform activity rejection when you try to move above RSI 50 for the highs there, early December of 2015, double top rejection and back below RSI 50 for the highs here before we get this drop. Now take a look at the exact opposite. When the market was trending higher, we see the exact opposite. You got uniform activity support at RSI 50 for the lows there, uniform activity support for the lows there, uniform activity bounce on RSI 50 for the lows there, uniform activity bounce for the lows there. All of these were successful re-entries. Uniform activity bounce for the highs there. And we can also see, again, the equation has changed lately. As you can see, uniform activity rejection at RSI 50 for the highs there, uniform activity rejection at RSI 50 for the highs there. Even this is uniform activity above 50 back below it for those highs. And recently we tagged RSI 50 and stalled. So you can see that net we can assume that we are more in an environment that is poised to go lower, if not sideways. If we take a look at the South African market, we can see evidence of uniform activity rejection here for those highs, rejection at RSI 50 for the highs there, rejection at RSI 50 for the highs there, and over the last week or so, double top rejection there. So right there for the highs here and here, which is why we are still pulling back over the last couple of days. On the weekly, for the South African market, just like other markets we've seen, it needs to hold above the recent weekly closing low. If it can hold above that, then it's not breaking down. But if it's gonna see lower prices, then it is first and foremost gonna break below the recent weekly closing low for over the last couple of weeks and months, and that would be a break below 1565.34. If it breaks below this price range, expect lower prices. Otherwise, the weekly is kinda okay. Keep in mind, if you go back to the last couple of weekend analysis videos, we've been expecting this RSI line to hold, and we saw that it came back and tagged that line with good double bottom support here and here. So as long as it is holding above the RSI line on the weekly, I would say it might be sideways here for now, but we shall see. If we take a look at the French market, a little bit of a different picture. Go to the daily. Now you can see here, as long as the French market is holding its daily RSI above 69.1, don't expect a strong pullback. Same thing can be said about the German market. It's been trading above 69.1 over the last 2 weeks or so. So as long as the daily RSI continues holding above 69.1, don't expect a major pullback as far as the German market is concerned. Unlike the German market and the French market, the FTSE is coming back to test the top side of its weekly RSI. Until it moves above that blue line, I would not expect it to advance beyond current levels. We can also see that this is also corresponding with the recent movement off the low. So this RSI breakpoint corresponds with movement off the highs there. We draw a line from there, and we can also see that right now the daily is coming back to test this line. So until the FTSE can move above these two lines, I would suspect that if resistance is confirmed here, then the next meaningful direction is down. That is, if resistance is confirmed. If the market can move above those two lines, then we might see an attack to fresh highs. If we take a look at the FTSE from a weekly standpoint, we can see that it needs to clear the recent weekly closing high if it is to trade higher. So this weekly closing high here is just in sight. The market would need to clear that recent weekly closing high if it truly has momentum. So we can see that the level it needs to move above is 7,044.36. If it can clear that price range, then we can give it the benefit of the doubt to move higher. Otherwise, failure to break out would suggest that the daily charts are in control, and that the daily charts are confirming resistance, and that we can expect the next swing trade to be down. So a breakout is what the bulls need to see. Otherwise, we might see this drift lower. If you take a look at the daily chart for the Canadian market, we can see that ever since there was this breakout, so this breakout in RSI, which corresponds with this price breakout, This market has been behaving very well, as you can see. So there was a breakout there. If we extend the same RSI breakout line, you see that this is where it's been finding support over the last couple of weeks, coming back with every pullback and bouncing on these lines. Like here, there was a nice double bottom for the lows here and here, and over the last couple of days we hit that line here for the lows here. So as long as the market is defending that line, the RSI support line here, as long as the market RSI on the daily is above this line, we should expect this market to be sideways to even bullish. Now at some point, should this line break below that green line, now that would suggest that the weekly chart might start controlling. As you can see, what we've been doing here over the last couple of weeks, market's been moving higher in terms of weekly price highs. The RSI continues to show this potential resistance line here. So let me show that again. You got RSI making lower highs, prices improving. Maybe over time this could be where we get the look that eventually brings the market down. But as long as that daily chart is above the RSI breakout line, we have to assume that this market continues to be okay to bullish. So as long as the daily chart RSI is above this line, let's give this market the benefit of the doubt. If we take a look at the Brazilian market by way of the EWZ ETF that trades in the US, we can see that we are still looking at potential support or failure on the weekly RSI if this line can hold. And this line connects the recent lows here, here, and now this is still being tested. It's taking a while, but if it can hold that blue line, eventually this market might actually, if it can hold this RSI line, eventually we might start creeping to the upside. Otherwise, we can obviously see the risk here is that the market fails to hold this support zone. Failure to hold this support zone and cracking below that would be short-term bearish. That would also correspond with the weekly RSI breaking down below this blue line of support. So either we can get support, just to summarize this and to keep it as simple as possible, if the Brazilian market EWZ ETF can hold this line, that's good. Also, if it can hold this RSI lows line, that's good. On the other hand, if we break below that RSI lows range, we break below this line, if we do break below this line, then that might suggest that the next meaningful direction here could be lower. So we either get support for a bounce or a failure of support, and the next swing trade might be lower. Eric Muathe, Muathe.com. As always, good luck, peace, and blessings. ESS. Woo!